Buy low, sell high. It is the most common sense mantra. It's the equivalent of saying make sure you unzip your jeans before you poop. It seems so obvious. In fact, every market guru will pitch their garbage to you on YouTube. Stock market secrets, buy low, sell high, how to do it consistently. I know, click my links that make me money. Buy low, sell high, stock market strategies. I know, click my Blogspot website and give me AdSense money. Forex trading secrets, buy low, sell high. I know, click on my website, I'll sell you some stuff. Oh, one-on-one mentorships. Pay me money so you can just suck at trading. Forex trading secrets, buy low, sell high. How to do it consistently and profitably. I know how, click on my link, give me AdSense money. Buy low, sell high, so I can afford a haircut. But in all seriousness, guys, I understand the appeal. Because it's sold to you in such a way that it's a binary option. You either buy low and sell high, or you buy high and sell low. But you're not a moron. You know that doesn't work. You don't buy high and sell low. That loses you money. So obviously it's buy low, sell high. Obviously you got to unzip your pants before you poop. But here's why it doesn't work. If we remove all these markers, let's zoom in a little bit. Let's go somewhere here. Now, at what point do we hit the low? Do this yourself on any trade, any given trade. Doesn't matter what stock you look at, as long as it has some volatility. Just keep going sideways and draw any technical analysis you want. Whether it's horizontal lines, whether it's Fibonacci targets, it doesn't matter. Do whatever you want. And try and tell me where the low is. I'm going to guess here somewhere at 61.8 because this is the horizontal and it's a 61.8 level. Okay, look, I correctly guessed that because I kind of know what I'm doing. But that's not the point. The point is if you do this, you'll not pick the bottom at least 9 times out of 10. I'd argue 95 times out of 100, you'll not pick the bottom. And this is why you want to trade momentum. You don't want to try and pick the bottom. Look, I strongly encourage everyone to pause this video right now and go find 20 to 30 stocks and try and pick the bottom. Now this channel heavily focuses on ASX small cap and micro cap stocks. So you're going to have a lot easier time if you pick a stock like Tesla or a blue chip stock like Telstra, CBA, Westpac. You're going to have a lot easier time and success rate in picking the tops and bottoms on these more predictable, slow moving large cap stocks. So pick something like a micro cap, anything less than 50 million market cap, and try and tell me how successful you are at picking the bottom. Am I right? Are you missing 90% of the time? Let's say, for argument's sake, let's say you're a genius and you pick 30% of the time correctly. You pick the bottom 30% of the time correctly, and you pick the top equally as much. You pick the top 30% of the time as well. Statistically, how often are you both buying the low and selling the high? The answer is not 30%. You've probably got maybe 2 out of 10 trades, you're doing both buying the low and selling the high. So mathematically, statistically, it is a terrible technique to buy the low and sell the high. So I really want to drive home the point that on the ASX, in the micro and small cap space, this is what a stock will typically look like. You'll have 2 zones. You'll have a nice upward trending trading zone. And the second zone is when it finally fails and drops and you've got new lows being made. So we can argue that all of this is basically the sucker zone. This is where your buy low, sell high mantra comes in. Now, how profitable does this look to you? How many lows are being made and how many times are people buying the lows based on horizontal levels? How many times do you see on the forums around here people that are trapped from, say, up here are posting, oh, this is a bargain, this is cheap, this will go to the upside, I can't believe it's X million market cap. How many people are doing that? All the suckers, because they don't have stop losses. So what's the alternative to buy low, sell high then? Well, for me, it's buy high, sell higher. Note, it's not buy high, sell the top. Because, again, statistically, we're not going to pick the top. At least no more than 30% of the time. So I'm assuming you have rudimentary basic technical analysis skills. If you don't, just Google basic technical analysis. It shouldn't take you more than half an hour to learn the super basics. Here we have a resistance level. It's the previous high. We draw a horizontal and we wait for a high volume breakout. In this case, it's actually quite high here. Let's say we buy at 3.1 cents on the following day. We've got a breakout on high volume, we buy at 3.1. Now, because you're a sensible human being and you don't want to lose capital, you set a 20% stop loss. So that's 0.6 cents. That'll put us a stop loss at around 2.6, 2.5. Now we hover above this support level now, and we see this pump occurring on high volumes. Now, because we can't sell the top accurately, you might sell half a parcel on the first day, half a parcel on the second day. I don't know if there's a news announcement that came out this day, but the point is, you're not going to pick the top. As nice as it would be to hit this 7-cent target, you're not going to hit it. Realistically, you're never going to really hit that consistently. So there's absolutely nothing wrong with buying here at 3.1, selling half at 4 cents, and selling the other half at 5 cents. There is nothing wrong with making profit in this trade. You just identified a trend and you traded that trend. Sure, you might feel a bit shaky here at 3.1 when the price drops to 2.9, 3.0, but that's just a reality of trading. So you identify the resistance and you identify the trend and you trade the breakout. It is the most consistently profitable thing you can do as a new trader. Now, as you get more confident, as you learn more technical analysis, as you learn more fundamentals, you're going to be much more successful at picking where to sell. Now, again, you may not sell at the highs here, but that's perfectly fine. Here's an example of a stock that I traded yesterday by buying high and selling higher. I actually made a video of this yesterday and I tweeted out about my position. I identified this one really late, but I still managed to get a trade on. So I identified this resistance here and this horizontal level. And if we zoom into the 5-minute chart, this trend line is inaccurate and wonky. So once you zoom in, the trend line goes a bit off for some reason. So it should look more like this. So I identified the stock around here, did my research, waited for an opportunity, realized that it broke one resistance level and failed to break another. But I saw it as an opportunity based on fundamentals as well that I wanted to get into this stock. So I bought around 57 and 58.5. I had 2 trading parcels and I sold one on the open the next day. Right on open, I sold one of my parcels and I'm still holding the other one. So I'm sitting in profit on one trade and I'm sitting a little above break even on the second one. I've also got a stop loss of 10% in case this trade goes against me. So either way, I'm in a healthy trading position. Now, I did set a 96-cent target for this stock, but keep in mind, guys, that was set because of the fundamental analysis, and it just happened to line up with the technicals to give me a target. So if this was a purely technical analysis-based trade, I would probably have a position after this breakout to the upside because it's on strong volume, and it'd probably be around 61, 62 cents. And I wouldn't be too concerned by this move here because this is still an uptrend stock on high volume. I would have sensible stop losses of 10 to 15%. And then it's just a matter of time before the stock keeps the trend and momentum to the upside. And if it doesn't, that's just unfortunate. That's just how trading works. We can't be 100% accurate. However, I would still be comfortable in this position and I would trade on the next big volume spike to the upside. And I'd perhaps look at, because we have some historical information here, I'd perhaps look at something like this weak horizontal at 77 cents and then a second parcel at 83 cents. But guys, I'm trading this one for a fundamental reason and I'm still targeting 96 cents. But this is exactly what I'm talking about when it comes to buying high and selling higher. One shouldn't look at this trade, at this momentum and go, oh, it's too late. I've missed the boat. I'll look for something else. That's the end of this tip video for today. If you enjoy the free content that I provide and you'd like to support it, I have set up a Patreon page that you can find in the description below. Otherwise, if you can just leave a thumbs up and subscribe, every little bit matters and makes a difference to the channel. Thanks, guys.